All right, we are live. Welcome to Crypto EMC, guys. With me is my partner in crime, Lee. How are you doing, buddy?
How are you, Radu?
Awesome, awesome. So, guys, we've been scouring the charts, looking at the market, trying to see what we're going to be doing next and how we're going to be acting next. And the thing about large time frame analysis is we tend to find that it's moving very slow. So we want to be actively doing it. But trading is not you working at trading. You know, you're anticipating and trading. So a lot of the times we tend to want to give ourselves I have to do this, and this needs to happen on that specific time deadlines, but trading does not do that. So today we're going to be debunking some of that. We're going to be touching on the emotional market cycle. Lee, you have a bit of Bitcoin ready for us. And although I might be a little bit of bullish, I think we've got Lee with some common sense in the house. And something that we need to keep in mind as we go about our investment and trading journey. So that's it. So it's going to be a busy show. Takeaways, we're going to be looking at some updates on Vechain and some of the other projects. Plus, there's some new movers in the making that we want to share with you guys. So, yeah, welcome to Crypto AMC, guys. Right. Okay. So I keep on forgetting to get that button close now. So I'm playing producer as well, guys. So you have to excuse me. Right. Okay. Well, guys, I want to share something with you. And remember when we started off and me and Lee created the introductory video, and we spoke about how there's three pillars to successful trading. Pillar one being obviously fundamental analysis. The second one, technical analysis, and then the third one, obviously, timing, because without timing and understanding the scale of the impact of your decisions from the TA and the fundamentals that you apply, you're not really going to get to become consistently successful. And looking at that and that type of mindset, I just want to bring to your attention a tweet that I saw, and from Willy Woo. We all know Willy Woo, and he's really renowned for the work that he's been doing. And what he's saying there, that the contour map of every Bitcoin at the price they last changed hands between, between the investors. And when we look at the contour map, it basically shows, and the print, that there's a huge price validation between $50,000 to $60,000 for Bitcoin. So in his opinion, 1 trillion asset class Bitcoin has been locked in, and I tend to agree about them. But now there's a lot of speculation around this level saying that this might be the bear fall. Now, we've done a lot of research around the bear floor, both me and Lee, and I tend to disagree with a lot of the conventional sayings out there because of a few different reasons. And what I'm going to do is I'm just going to flip back to my emotional market cycle chart. Now, I've explained to you guys, and you've seen the chart, and you've seen how we've laid out the halvings. We've looked at the extensions, and we were able to use this to plot out the similarities between the previous bull cycles and the current bull cycle. Now, what I just want to point out to you guys, when we look at this bull cycle, and we look at how the market tends to step on itself. It tends to always create a reasonable top, breaks it, and then that never gets tested. Now, what do I mean by that? Well, if you look at our chart and we look at how Bitcoin has been growing over the years, and one thing that is clear, and I'm just going to use the same fib retracement tool that I always use for this. And I've got it pre-templated already. So just for time's sake, I'm just going to speed it up. So when we go past this 1618 extension and we start testing it, what we find is that price, the next low, never comes and visits this range again. Now, this should really start triggering your train of thought, because if that is the case, and where we were just a few weeks ago was slightly above this level, And the way that we look at that is we go to where we are currently now, and I use the current price action, and I do that same fib level, and this one I've just turned blue. You can see that we're barely above this range over here. And what happens is, once we get this test, and I just probably need to zoom in and maybe go to a weekly candle, because it's just going to show and print a little bit better on the screen. So when we do that, and I'm just going to do this for this one as well, and we look at the way that price never goes and revisits that range, that basically the structure and how the structure gets created above this extension, this hope phase, this optimism structure that I believe that we're in at this stage, because we're optimistic about the bull run, but we're not quite in belief. Nobody is. The articles are going out there that it's going to happen, but nobody is really putting their life savings, mortgaging their houses just yet. We are getting the correct marketing that allows for it, but it's not quite there yet. So when we look at this optimism and we look at where we are, when we look at the next time round, price starts going higher, the 618 level, sorry, I just need to get to the right zone. The 618 level then becomes a floor, a structure gets created, and then we go and test that range. Now, we created a structure, and now we're on our way to go and test that range. And the main thing that I'm taking away from this is in the way that it's looking at this stage. The pivotal area where the ultimate shakeout will happen within the structure where we are currently should be at around the 45.50 level. But this then all gets determined by what happens next. So I would imagine that it would be a little premature, because if we look at the previous runs and we look at this run over here, what we can see, and it clearly shows it there. Maybe I must just zoom in a little bit more. So what we can see is that these structures aren't seemingly random, but they do not repeat the exact step or the exact phase as per the previous cycle. So what needs to happen first before we can really start looking at where a possible bear cycle end would be is I would want to see us leave this range first, create another structure above this. And only once that is laid in, we can then come back and say that this is definitely confirmed in. Because otherwise, this could be considered as a wick, and our main structure where a lot of time was spent would probably be around the 47, 48 range. If we don't leave this range and we go back down, we can probably spend more time before we even start getting into a bull market. So we have to be breaking out and make these higher highs and create a new bearish structure in order for us to start locking this in. Okay, so that's just something I want you guys to take with. So remember now, we've given you guys the context, we've explained how it looked, and we also showed you guys that looking at the way that these charts are printing and the way they're growing, and we've given you guys a theory that we have, or a prediction, remember it's not a guarantee, that the next bull cycle should probably be ending at around 800-day mark, as we are growing from 300 to 500 and on our way to 800, most probably. Now, this is all hypothetical, but if we do this as well and we start layering out a trend and we start looking at the extensions, there's a lot of confluence at around this level here, where we hit that $200,000 Bitcoin mark to 250, even $300,000 Bitcoin mark in relation to the trend that's currently in place. So keep that in mind before we move over. Now, at the moment, a lot of people are looking at the market and they are definitely bullish, and rightfully so. But let's just get an eye in on the DXY, because the DXY tend to move in the opposite direction. What do I mean by that? If I take away a lot of all the noise and we zoom out, and I'm going to go over to a monthly candle, and we look at the DXY, it's been trending down ever since 1986. Now, one big thing, and I haven't done this, and maybe we need to explore this, is to look at the 93 internet bubble and obviously how that played in and see if we can lap that in, because there's a lot of people comparing the Bitcoin run and the adoption that's actually happening is the same as the adoption that we had in televisions, internet, and all the daily tools that we use and take for granted today. So looking at this and looking at the DXY, you can see that all the quantitative easing, all the additional printing of US dollars has devaluated the dollar currency in itself, the buying power of it. And what we can see is each and every bull run ends with DXY retracing. And at the moment we had a DXY retracing, that's money fleeing the dollar and looking for safety elsewhere. Now, if this is the case and the way that the DXY is printing, we are creating a textbook beautiful laid out distribution pattern, meaning that over a period of time, the dollar is leaving and it's using demand to sell into. So every time people are running back to the dollar, that's an excuse to have more buying power to leave the dollar. And that's why supply keeps winning. There's always a lower high in play. And at the moment, the next pivotal point where I would imagine that this bearishness of this bullishness is going to start kicking in is most probably when the DXY starts capturing this imbalance that we have. So at the moment, imbalance is sitting at around the 95 point level. And I imagine that we might have a little shoot into that range and then go back down. And the time that will happen and the timing around that will most probably be the area where momentum should kick into Bitcoin. So on our way to that zone, I would imagine that Bitcoin needs to have a little bit of a retrace. It needs to recapture a thought so that it becomes a sensible progression of moving your money from dollar back to Bitcoin once the dollar reaches a critical imbalance level for the continuation of the trend. The nice thing about waiting for that and waiting for them to take action, it means that you're going to be taking action with your back against the wall, where the idea is once the pressure is too hard, you will immediately be able to feel and you'll be able to turn around and get out of your position. But if somebody is pushing you and your back isn't against the wall, but how far can he push you? And you're going to be walking backwards until you see that this is where I have to draw the line. So taking an action at around this area would be easy for me to say, okay, right, hey, my back's against the wall now. If he manages to do this and continue on, I'm going to lose. So let's get out of our position. Okay, and that brings us over to Lee. Buddy, you've got some interesting thoughts around Bitcoin. And although I'm ever the optimistic Bitcoin trader, and I believe that we have to treat the trend as if it's going to last forever. Realistically, common sense says that these pullbacks is needed, and it's in these pullbacks that we can create new opportunities, get into the market if we may be late, with a realistic safe zone. So Lee, over to you, buddy. You've got 6 counts there, and it's a little, what would be the right way? Overwhelming at the moment. So maybe you can simplify that for us, so that we don't lose track of where we're at.
Okay, so basically it's all about what you said about Bitcoin. We can expect a retracement if we don't break this all-time high to what 70K.
Can you maybe expand that screen, Lee?
Yeah, I'm gonna just go quickly through this, and we're gonna go also through a little bit of Elliott Wave as well, and how we can see everything that you said, but with numbers and levels. First, this is a weekly chart. So these are the levels that we have calculated in the past. And we are currently above that line, which is 65, which is good. Okay, testing this 55 area, if you hold this, I'm expecting the next level to go to 75K or even 78. But that's on a weekly chart. It can take 1, 2, or 3 or 4 weeks for this to happen. So I just want us to write down those numbers first, 75.8, and then next level will be 88. That's on the weekly chart. And on daily, you can see how those lines serve as resistance and support. So on the daily, I've got here 69, which we almost come close to that level with like $1,000 shorts, and 78. So between this weekly and daily, there's 75 and 78. If we go above 70, that will be my resistance area. And then obviously this 69 I still have in my book as a target, as a short-term target, 69,465, plus minus $100 or $200. Okay. I just want to point out this chart as well on 4 hour. I've got here a nice line that I'm following, this angle. It's about 45 degrees angle line from here. And as you can see, this line serves as support and resistance every time. I mean, you like to call it an axis line, Rudo. We are hovering up and below this line. So right now we are just fighting. Yeah, we're testing it now. So closing below this line, this is gonna serve as resistance again, and then coming below those level is expected. If you can go above that, that would be a more bullish sign for me. So this line
that will bring that 78 key in. Because if I think about it, Lee, if you copy that line and put it on the highs in that midsection there around the 40 to 50,000 range, you just duplicate it and raise it up. There we go. Can you take it to that high there at around 40 at around August level? Yeah. Just move it up there. Okay. Now take a trend line from the current low and draw it out. You know, that low at around where it's around $60,000. Just a normal trend, not a parallel line, but you can leave that one in there as well because that would be a fail safe. So what we're getting, this is supply angles and demand angles. So what we are laying out for you and what you guys should go and replicate is key zones where you can expect people to take profit, supply to enter the market, and key areas where you can expect demand to enter the market. Now it's 3 lines. It's not that daunting. It's actually very easy to do that. And now the key and the hard part about this is just to have the patience to wait. Remember, when we're looking at the 4-hour timeline, we are actually looking at a trading and very little and not as much as an investing scale of decisions to be making. But the nice thing is, if you've got on the larger time frame the setup of a probable reversal, diving into the lower time frame, if you're skilled enough, would make it easy for you to actually try and narrow down that range where you can start taking some profits. Because remember, nobody goes broke by taking profits. So thanks, Lee.
Okay.
And if you draw a trend from that low point there, I can just open that chart there. We can actually see if we can do a little bit of a timeline there. See about when we would want this 78.
It's funny that you are talking about. It's funny that you're talking about before the show about this date 11, 12, 13s. I've got also. Where is my chart? I think it's this 8-hour chart. I was playing with the time in my way, the way I'm looking at time. I'm duplicating those lines that also serve me as a trend line, but more for like time and movement of the price action.
The time
this
angle.
is the time angle. So if I have to put this line here, a little bit towards the right, so you can see every time we reach this kind of yellow line, the price starts to react. All right, so this then is following those lines every time the price is touching those lines at that stage. So if
and funny enough, just to add on to that, for everybody, these angles seldom changes. So you draw it once, you could probably use it for the history of Bitcoin.
So basically, I'm just copying every time this angle line and put it towards one of the pivot low. And I'm seeing here, if the price is hovering around this area, that's about 14s, 15s, 16s, this kind of zone where be very careful about this price action. And if I have to put another line here, like this, we can look at between the, exactly, it's 12, 13, right? So between the 12 and the 15, this kind of time zone, let's see if we're gonna be correct on that one. During this, between the 12 and 15th of November, we will see a little bit of price action, I think. Okay, so we can follow those lines and let's see what
should the current trend hold.
Yeah.
Should the current short-term trend hold? If it breaks and goes up, obviously that.
Well, then you extend a little bit in time, but those lines are gonna be very pivot point for me in terms of price action. So when I decide to take a trade, basically, I would like to see those lines, and I will take position the closest possible from those lines, so we don't waste too much time within this zone when price is doing almost nothing. Okay.
I see there's a lot of questions, guys. Lee, sorry, buddy, to interrupt you. See, there's a couple of questions on how do you draw this. So this is just normal trend lines, guys. And all that we did is we just extend the one side of it. So at some stage, we'll be creating a educational pack for you guys to show you how we go about this, because it's really hard to explain in just one session. There's a lot of foundation work that needs to be done for you to grasp and to use the tool properly. But for you to go and replicate this, you can stop the screen, start drawing them under. You can use a simple trend line. That's all that we use.
Okay. In terms of Elliott Wave, a different count that I was following, I'm still following for quite a few months now. I don't want to sound too bearish. I mean, for now, everyone wants to see this kind of counts happening.
That's the count I want.
That's a count everybody wants.
That's my count.
that's the count that everyone wants to follow and wants to see happening out there. And basic rules of Elliott Wave, everything moved to 1, 2, 3, 4, 5 wave up, and then correction 3 wave down. So if you're following only this orange line, so we've got 1, we've got A, B, C down on 2, and now my minimum level of the 3 wave needs to end at 78,000. Okay. So again, that number coming back one more time, 75, 78. So for this to be very impulsive, I need to see the third wave, the target of 78,000 at least and above, but minimum will be 78. Minimum there. Now, the problem that we have is, why do we have a reaction here? Now let's dive a little bit into it and see how the bears are looking at this market right now. So now we've seen, everyone's seen this bullish count, this bullish target. We can park it on the side. And now let's see what are the opponents is looking at in the market, and why do we have this price reaction, and why people are selling or shorting the market right now. This is another bullish view, but in this case, we are not looking at impulse, but we are looking at more like diagonal, leading diagonal. And you can see from that 1-to-3 ratio, I just added another level, which is 123% here, 68,260 something, right? And we can see that we touched exactly almost to the dollar one of this level. So that's why there's a bunch of people that are bearish on BTC and they want to short this market right here. If they succeed to do that, now we can have some reaction to the downside before we can move up again. Okay, so in that case, instead of having the 3 here, we can also put a 3 here, but that will not be an impulse wave anymore. That will be a leading diagonal.
That could be a bigger retrace. In
that case, that 4 retrace that we're expecting here needs to come back below this 53,000. So yes, there is a possibility that Bitcoin is going to come back below this 53 if you are following this count. And believe me, there are always a bunch of traders are following all different counts, and they are fighting against each other. All right. So
what this does as well, Lee, and for those that are deep, if we start going into a case where this happens, the scenario plays out. Remember, TA is a prediction tool, not a guarantee tool, and it's a risk management tool. The only guarantee is how you conduct yourself, if you apply the risk correctly and adhere to that. So the scenario that we're looking at now, if this happens, this one where we don't go higher and we start falling below the 50, what that would mean is most probably that the consolidation, this sideways trend that we've been experiencing. Now we're saying it's a sideways trend on the daily, weekly, and the monthly, but for days and for the alts, it's been a crazy ride. But it means that it might extend that trend for a longer period of time, because the fact that we are not impulsing away, the market is not showing us a clear agreement that, hey, we're ready to start going into the $100, $200, $1,000 level range. we might be spending more time, which is not necessarily a bad thing, Lee, and maybe you can explain why.
Well, yeah, I mean, in terms of market cycle, if you followed the 2017 market cycle and what happened back there, I remember the really the last run of this bull run happened in mid-December, beginning of January. So for me, having a bull run right now from the 1st of October, and that's gonna last, I don't know, 3-4 months. I mean, it would be nice for our bags and everything, but realistically speaking, I'm expecting only this bull run happening end of the year towards December or beginning of January. And there's a say also in trading in crypto, you know, I mean, we are in South Africa, it's summer here, but you know, for most of the traders in the States or in Europe, in Japan, you know, it's winter. So there's a crypto winter. It's a good opportunity to buy. And why? Because, you know, the price needs to react and to retrace a little bit more. So I just don't want us to be surprised if we see Bitcoin go dropping to 53 or even below 53, this kind of level. So we'll be prepared. So that's why we shouldn't be invested full in USDT in this market. I know, Rudo, how much percentage of cash you have in your wallet, because if that happens, then you'll be the one smiling.
That's perception. It's how you perceive the dump is based on your previous actions. So if you take profit when there's demand instead of holding when there's demand, you end up having the opportunity when there's a sell or when there's a sale. It's going against your natural impulses, because we love it to feel good about going up, but that euphoric state makes us forget to take profit.
No. So yeah, so I just want to point out all those levels of reaction that we can have. And now if we see the price going above these levels, you know, 68, 69, give or take 69, then the next level will be 78. And that will basically invalidate this diagonal. And then we can call a full impulse. But even back there, then we can have another false retrace.
Still a retrace.
Can be a little bit shallower. And then technically speaking, if this is the impulse, this 4 will never come back below the 1.
To 1. Which gives you good entry, because now you have a rule to apply a stop limit to, and some risk management. One thing I just want to add, Lee, before we talk about the futures and the future of Bitcoin, I want you guys to, and remember, I said this many times, and it's true, I live by this, I trade by this, that you are your own best indicator. And the way that you feel is the way that you should be looking at how everybody else feels. It's herd mentality. That's the way we're hardwired. The only difference is the way you act needs to be different to what everybody else is doing, but only in key levels. Once a certain extreme emotion is growing within you. So if I now use that foundation, and I talk to you guys and I say, okay, right, if we look at what's happening in Solana, it's literally just launching. Look at what Polkadot's not even off the ground yet. If we look about all these exciting stuff that everybody is, you know, chopping at the bit to try to get their hands on, talking about, speculating over, discussing, and that's only happening now. Do we honestly believe that a bear market would execute itself or happen within a few weeks from now or a few months from now, with all these fundamentally huge things kicking into play? For me, realistically, a true bear market, a crypto winter where things are going down for 2 years plus, should happen after these adoption crazes. And everybody that is still on the side thinking about it ends up FOMOing in, not into Bitcoin, but into on these projects at the all-time high. And if we then take that in consideration, thinking about and saying that maybe what you need to do is give the crypto market another 300 days before we realistically say, call it quits and go bearish, does not seem far-fetched now, because those projects still needs to get mass adopted. The winner still needs to be crowned. All these things probably still need to happen. And you know when they're going to happen? When we have an extreme bear market. because that's when projects die and disappear. And then we really know which ones got good fundamentals behind them and which ones stated that they had good fundamentals behind them. So that's just something to keep in mind. So within your hearts of hearts, you know when it's going well, then you need to be taking profit because somebody else is feeling the same and he's going to be paralyzed. Remember that. Okay, Lee, moving on to the next chart or the next thought.
I've got a lot of different count, but we're gonna stick to these two first. I don't want to sound too
let's not
cautious.
confuse.
So let's total market cap. Like I said, I think was last week. We need to be careful when we reach this kind of zone, 123, 138. We did mark this red box, so we are right into it. So there are a lot of telltale signs that give us, okay, price need to react at those kind of level. So it is normal that we are struggling to go through this 68, 69,000 K on BTC.
And it's creating some bearish divergence as well, lately.
Bearish divergence.
And can you just, for some of the viewers, is it strong or hidden bearish divergence?
This is a reversal. The RSI is making a lower highs and price is making higher highs here. So it is a reversal. It is a strong bearish.
Remember, strong bearish divergence breaks the trend or reverses on the trend. And hidden bearish divergence is a continuation. So what we want to see is a hidden. So let's see. There might be some more upside first before that happens.
Okay. That will give me the sign of 1, 2, 3 reaction down.
A third wave, yeah.
Third wave down. So the one that you want to see happening is the hidden bullish divergence that is holding. You don't want to see a hidden bullish divergence get deleted by the bears, by the sellers. That means that the seller is winning a battle, and then you have to wait for a strong bullish divergence to reverse the trend.
To get us back up.
Currently, right now, the only opportunity for the bears to reverse the trend is to respect or to trade those strong bearish divergence, because every single hidden bearish divergence will get deleted by the hidden bullish divergence. I saw a question yesterday about this divergence, how those works. So assuming you are in a downtrend, and all the bears will trade the strong bearish divergence and the hidden bearish divergence, and the bulls will take only the strong bullish divergence, because when they trade this hidden bullish divergence, they will get deleted. It's not gonna work until one of them it will work. Then that means that the bull will gain momentum again. They will win a battle, and then we change the trend. We change the momentum basically. Okay, so strong bearish here. We should see 1, 2, 3 wave down, and then after that we should have a hidden bullish divergence, and hopefully that hidden bullish divergence we stick and we will work in bull's favor.
Treat the trend as if it's going to last forever, so don't pay too much thought on that. Divergences can get deleted, but you're going to have to take risk to get in on the market. So don't fall into the trap where you end up doing nothing because there's always a divergence of some sort kicking in. So just keep that in mind, guys.
Okay, so total market 2 excluding BTC as well. We hit to almost to the dollars 1,684,000,000 1.5 here with one of my
but not really showing signs of negativity in the market.
No. I mean, only if you look at the weekly or monthly, you could have a divergence. Let me check here. On a weekly, on a weekly you can see
on its way to try and get out of it.
Yeah. No, on the weekly it's clear here with,
because if you look at the previous pivot, I don't know that one, but if you look at the pivot that we're currently fighting, if we can get that RSI above, there where you were now, that would already give us a little bit of a hope to see if we can get a little.
But remember,
bit more out
we
of the
still need that weekly candle to close. That's 4 days left. Yeah.
So a lot to happen. It's not locked in, guys. So please just keep that in mind.
And so I mean that's it for me. If you wanna take a trade, I can give you Bitcoin Cash. Even though Bitcoin, I'm not so bullish. The Bitcoin is fighting. And the reason why Bitcoin is fighting as well, because we are at this 123 level, because we know there's bears coming in the market, people are shorting the market, and there's bullish guys in the market as well. So it's all about, on the short term, it's all about this liquidity. Where are the stop losses? Where are the liquidation levels? So if you have more people shorting the market right now, and where are they going to put their stop loss? They're going to put their stop loss at the top of these candles, right? So if I take a 15-minute charts, all the stops for people that are shorting, they'll put the stop at 68, 60, 68.3, 68.2, all those pivot, okay? And now, if the market maker thinks that there's more money to get, if they push the price higher, and all those stop losses or liquidation level will become a buy on the leverage platform, a promise to.
Did we lose Lee? It seems like we've lost Lee. Guys, I'm just going to remove his screen. Everybody else can still hear me. Maybe give me a comment there. Let's just see. We're running through some technical issues. We've lost Lee. Yes. Okay, cool. Guys, I think load shedding is kicked in. Lee was running on his generator with the aims to, if load shedding kicks in, that he doesn't get disconnected, but I think the internet might have dropped him. Okay, guys, so I'm just going to take it over and continue the thought that he had regarding the way that these liquidation events kick in. And let's maybe use VET as an example, because the next coin that I wanted to give you guys an update on was Vechain. And so I'm just going to quickly bring my screen into the stream. And guys, I want to share something with you guys about some more news regarding Vechain. So Vechain has been invited by the Shanghai Mingyang government to discuss their product's use case. Now, this is the type of positive news that we should not try and fall in love with, but this is normally the positivity that helps fuel momentum for a coin that's broken some news. But that positivity still needs to find eyes and ears and keeps on tracking out there. So the main thing is for VET support probably needs still sitting at around the 15-cent range. So this is still my buy zone. I'm going to be looking at adding to Vechain there. Like I said to you guys, take a little position here, wait for the higher high, and now you wait for the buy. And that's where you add a little bit more, because you're adding with profit. That's the nice thing. I like adding to a position when a position has proven itself to me. Don't you go and try and stare at the candles with the hope that it will grow. A candle has to prove itself to you. You are the one in control of the negotiations. So you always have to take that point of strength. You know, in a simple negotiation, whoever speaks first is normally the one that loses. So you need to do that. First I want you to act, and then I can counter. Gives me the position of strength. Now, what Lee was going on about, and we wanted to move the conversation down to, is exactly about trend establishment and how the trend can actually create forced buys. What do I mean by that? Well, remember when we look at trading, guys, there's always two sides to a part for a trade to happen. Somebody needs to be willing to take the other end of the trade. Now, the big thing that I want you guys to think of is, you know, in those movies, those trading Wall Street movies, where where guys are on the trading floor and they're screaming and shouting at each other, and the thing is, that's in reality what is happening. But the digital world of age has actually given us a disconnect of that. We're not thinking about trading in that way anymore. But realistically, for something to happen, you still need those trades to take effect. And I see, Lee, you're back, buddy. Awesome.
Yes,
So what happens is these trades and these stress points where people start fighting and bickering over, they create supply and demand zones. Now, what happens is when we have a forced buy, like Bitcoin, and like Lee's explained to you guys now, what happens is that, and I'm just going to flip back to the daily, what happens is that people start creating these key areas where they short the market. They do the other end of the trade. Now, these key areas where they short the market, we can mark them out. There would be one. There would be one. Simple supply and demand. And there was one as well over there. And what that does is, if you now go and calculate the simple dynamics between how people are thinking. If I was shorting there, where would my stop limit be? Now, everybody says, yeah, 3%, 5%. That's kind of what everybody does. So if I draw 5%, that puts my stop limit almost at break even for this guy again. So if I was shorting there, and I'm going to use a template line, I'm just going to say, well, there's my stop limit at roughly in the middle. If I take the apex point, which what most people would be doing, it literally moves my stop limit very tight to that supply zone over there. So I'm going to just label that stop limit line, okay? And then the same is going to happen for these guys over here. They're going to be taking their shorts and they're going to use the top, and then they're going to say, okay, 3-4%. Can you see it's already lined up with that limit line over there? So I'm going to now move and say, this is where those guys are going to want to try and hide their stops, okay? And this is the same for these guys. They're going to be shorting and say, I don't know where to put my stop limit, but I now have a little gain. So I'll have my stop limit also maybe 3, 4, 5% above that. That's just the way we normally think as human beings. Now, if I do that and I look at what's happening over here, once price reaches a certain point, it actually stresses. It shakes people out, makes them uncomfortable. Some people say, well, I'm just going to let this thing ride and I'm going to see it through. Who of you guys have been in a bad trade and you just say, I'll switch off the laptop, or I'll close the phone and I'll go play with the dog. All of a sudden, you're in love with your dog again. You go play with him because you don't want to see what's going to happen because you know you made a mistake, okay? So we see these things happening. So these guys get short squeezed because the market goes and then the first guy hits the short and the second guy short and the third guy short. Eventually, everybody runs. And that's a promise to buy, which means that guy is buying the price up at a loss to himself. Now, what happens? The next group of people, because of the way that the structure happens, the next group of people go with the same problem. They're now sitting, oh, this shouldn't have happened. Now I've got troubles. So maybe I move my stop to break even, or I leave my stop there to give the market time. Because we tend to, bargain with ourselves, say to ourselves, okay, I need to give the market a little bit of time, and it will go, it will go. It's Barry's time now. We need to hit that 36, that type of thing. So what happens is exactly the same. Price goes there, it starts making them uncomfortable, and then you get that beautiful impulse candle. That's the short squeeze candle. That's basically a cascade of everybody shorts being pushed up, and that's a forcible buy. So that's not a buy with demand. That's a buy with, oh, I should have taken profit, when I was in profit with my short. But greed created that scenario where I'm losing. So the same happens. So these guys are shaken out of the market. And I don't need to repeat the whole story again, but that's exactly what happens to these purple guys. So they at the moment are fighting. They are looking, oh, please be going down. Please be going down. So they're adding to their position. And that's what we are hoping for, to see. Are we going to be doing this, or are we going to kill them immediately?
We need this. We need this short squeeze. We need those guys to promise to buy up at a higher price for the price to go up. It
more money
has to be like this. Yeah. So but in order
we
for
give
that,
them a little bit more money.
The problem in order for that is you need more people shorting the market than people long in the market. The reverse effect of that is every time the price dumped a little bit, and people is gonna come on certain leverage platform and they're gonna open long position with leverage. So the same effect that we'll have on a short squeeze, you can have it on a long as well. Because if you open a 2x or 3x long at the bottom, you'll put your stop loss below. And what is that stop is gonna do is gonna push the price down and down and down and down, right? So it's all about how do you read those candles. So if people are still really, really bullish in this market, and this is what I can see and feel on Twitter, people is just, every time the price is dropping, people opening long position. Every time price is dropping, people is opening long position. Then they need to check them out, all of them, or even the bulls that are buying the price, the Bitcoin price on average. They need to check them out before we can have another pump to the up. And the only way I can see this happening we need more of bearish sentiment out there. People need to short, and I don't see any panic right now at that level on BTC. So that's why it's difficult to for all the market to go up again at those levels.
Yeah. So guys, I think we're running out of time here, and we will continue these a little bit later. I think tomorrow what we're going to be doing is we're going to be giving a little bit more fundamental, a jam-packed fundamental episode where we're going to be touching on the workings of the Polkadot and what we should know and what we should think, and how we should go about if we're not in it, what you do if you are in it, and what do you do if you are in it from the beginning, and so forth. So we can run a couple of scenarios through so that you guys can make an informed decision. Guys, if you like the content, please hit that like and subscribe button, and share with your with friends or fellow traders or investors out there that can benefit from the content. Let me just remove my screen there. Lee, buddy, I want to say thank you to your wisdom and your common sense, always bringing it to the market, keeping us sane so we don't end up going into this FOMO bull craze, because there is two sides to a story and there's two sides to a trade, guys. So always remember that. And I want to part with a thought. I want you guys to make it your mantra for the day. There's always the same amount of buyers and sellers in the market. Remember that. So thanks a lot. Lee, take us home with a closing remark.
I just saw a comment from I don't know, I forgot the name. Why it doesn't mean that every single long needs to be checked out, but the majority is always losing in these markets. That's one rule that you need to remember. So don't deal with the majority of because money needs to come from somewhere. It's like in a pocket table. I mean, there's the chips is coming from one hand to another one. And at the end of the day, there's only like the first, second, and third get paid, and all the others are losing. That's the rule. This is how we play it.
Awesome, guys. I want to say thank you. I want to remind you guys about our 100 to 1 million strategy that we're going to be. We've revealed the strategy, but we're going to be applying that. We're setting up everything for that. So please get in on this campaign when we launch. We're going to be trading $100 with you guys, and how and where we're going to do it, we're just not too sure, but we're working out on the details. But we want to do it in a way that it's going to make it possible for everybody to keep tabs with us. And guys, remember our big saying, when in doubt, slap a fib on it. Lee, thanks very much, guys. You have a lovely day. Tomorrow, same time. Cheers, everybody. Jeez, Lee, your load shedding took you out there completely.
Yeah.